In this series of videos, we will look at the financial statements of a firm and how to measure cash flow for a firm. In general, we care about big picture items, so I will generally keep the information at a high level and not get too far into the details of financial accounting. That is a very complicated field and is a whole subject unto itself. We will typically just use simplified versions of the financial statements. Now, when I say simplified, I don't want you to hear simple, because there is still a fair amount of detail we will be concerned with. If you've read the chapter and are familiar with what is in the videos, you'll be fine. Before we focus in on each of the financial statements a firm will have, let's look at some important sources of financial information for a company. Some useful sites to find financial data for a company are finance.yahoo.com. This is a handy place to find financial information for a company. First, we would just enter in the stock ticker or some other information for a firm. Here I'm going to choose Home Depot. And there's stock price information here at the front. And if we go down here to the left, you can see in the bottom there are the financial statements for a firm. If we click on any of these statements, we can get 3 years of annual data, or if we click on the quarterly data, we can get the most recent 4 quarters. The data you find here will be somewhat simplified, but it's still a good place to go for a quick look at the financial data for a firm. A similar site is finance.google.com, where again we will enter the stock ticker information. So I've got Home Depot. And again, I see the stock price information here at the front, and over here are the financials for the firm. With Google, we have the 5 most recent quarters in the quarterly data for each of the statements over here. Or if we click on the annual data, we've got the most recent 4 years. The nice thing about the Google Finance site is that it has more detailed information, and it uses the same template for all the companies that they look at, so it is very easy to compare. So I want to just show you real quickly. I've got Home Depot on the left and Lowe's on the right, and you can see that each of the line items is the same with each company, so it makes it very easy to compare firms when we use Google as the source of that financial information. Another place you can go to is a particular company's website. There's usually an investor relations section of the website, and here we can find it for Home Depot. And once you click on that, you can typically find SEC filings, including annual reports and 10Ks, and usually there's going to be some other financial information as well. So for instance, if we want to look at financial reports, we could see the most recent 10K, the most recent annual report, and then there's other filings available. Annualreportservice.com is another website where you can find financial information. It appears to link to investor relations portions of websites for the company that you're interested in. Unfortunately, the annual report service here, you have to prepare a login. But if we went ahead and signed up for it and I chose Home Depot again, if I click on Home Depot, you can see that I'm going to be shot to the investor relations portion of that company's website, and I got again the financial information here. And then finally there is SECgov, and this website has filings for publicly traded companies that are easily accessible. We would just go here to filings. We would go here to filings, look at the company filing search. We could type in the company name. And then there's a variety of filings they have. If we were looking at the 10K for the company, we could click here, find the link, and we've got their 10K filing with the SEC. So a variety of sources for information. The ones we care about the most are the balance sheet, the income statement, and the statement of cash flows. So these are the 3 financial statements that we will focus on. In this video, we're going to pay particular attention to the balance sheet. The balance sheet is a financial statement that firms prepare and which shows a snapshot of the company's accounting value on a particular date. It shows the company's investments or the assets of the firm, and how those assets were paid for, the liabilities and equity of the firm. The balance sheet is arranged in a very particular manner. Assets are on the left and liabilities and equity are on the right. For the assets, the items are listed in order of liquidity, or in order of how long the asset will take to convert to cash. The liabilities are listed in order of when they must be paid. And the equity is what is left over, also called the residual. Let's take a closer look at the assets. Assets are arranged in order of liquidity and are split into two main categories. Current assets are the assets that should be converted to cash within 1 year. Typical line items we'll see are cash, marketable securities, also called cash equivalents, inventory, and receivables. Fixed assets are the assets that will be around longer than 1 year. Typical fixed assets are things like property, plant, and equipment. This would be an example of a tangible asset, and intangible assets like the values of trademarks, patents, or goodwill. And typically we're going to just focus in on the PP&E and ignore the intangible assets of the firm. For liabilities, we again have two main categories: the current liabilities, which must be paid within a year, and the long-term liabilities, which will be paid later. Typical examples of current liabilities are accounts payable, which represents items that we've bought but not yet paid for, notes payable, which are short-term loans, accruals, which represent expenses we have incurred but have not yet paid for, and any portion of our long-term debt that is due in the next year. Typical examples of long-term liabilities are long-term debt, in particular the portion that is not due in the next year. There are other long-term liabilities, such as deferred taxes, but in the interest of simplicity, we will generally just worry about long-term debt. Finally, there is equity. This is on the right-hand side of the balance sheet under the liabilities section. Equity is defined as what is left over. It is the residual claim of the owners of the firm, the ones who own the stock. If the assets were sold and the liabilities were paid off, the equity would be the amount left over and it would go to the stockholders. There are two types of equity holders: common and preferred. Common stockholders are what you normally think of as an owner of the firm. We'll look more closely at equity ownership and common stock in a future chapter. Preferred stockholders are also part of the equity of a firm. Again, we'll consider more closely the peculiarities of preferred stock or preferred equity later. Finally, we should note the importance of another source of equity, the retained earnings of a firm. If a firm is making money and not paying it all out in dividends, then they will be increasing equity in the firm. Retained earnings is an important part of equity, and again, we'll be talking about this later on. So that's the end of this first video, and we're going to pick up in the next video and take a look at the income statement for a firm.